Wi-Fi in the van. Hey everybody. Good morning everybody. Let me light up an app I forgot about here. Hold on one second. Wrong thing. With the music. There we go. Got those. Good morning, everybody. Sorry I'm a little bit late here. Just a little bit of a sell-off. I had to kind of compose my thoughts. Because I did post, before we get started as usual, I'm not a licensed financial advisor, so anything that you hear me talk about here today, please, this is just my opinion about what I'm seeing in the markets. So if you were to take trades blindly based on anything that you hear me talk about today, you're going to end up losing all of your money and living in a van by the river. Now, with that said, good morning. It's 1600s in Germany. I don't know exactly what that means, but so yeah. Hey, good morning. Yo. M's mama says, hey, yo. Oh, it's 4 p.m. in Germany. 4 p.m., bro. Yeah, military time. A little slow there. Sorry about that. All right. So, we're going to talk a little bit about just what we've learned in 2021. Let me get my camera on here. And what we can kind of expect. Thanks, Vern. Appreciate that. .USD, yeah, we'll check out .USD here in a minute. Thanks for the request. So, I talked about this breakout that we had here. Now, if we look at it kind of more of a macro structure, it's definitely a bottoming pattern, right? But what we're trying to do is we're trying to catch the turn on trades early and get in trades as the asset is turning, changing directions. And it's starting to show signs of that, right? So still at a macro level, if we go just pause here for a second, look at this. At this very moment in time, we've had a series of lower highs. And on a closing basis, really, let's go to the 4 hours so we can kind of see this. On a closing basis, we've had some lower lows on this closing basis. Now, obviously, this capitulation low right here, this was more of a byproduct of open interest wipeout. Maybe not truly reflective of price on the market, so we can kind of discount that wick largely when just looking at general trend as far as I'm concerned. So I'm looking at these closing prices. Maybe these 4-hour closing prices is a good proxy. We had this general trend, right? We had lower lows and lower highs coming in here, and then we put in a little bit of a higher low here, and we got that bounce, and then on a closing basis, we came pretty close. We didn't quite put in a higher high. We put in a wick high, but not a higher high on a closing basis. And then we immediately turned around and went to the downside. And this is the area I was watching. Now, this is the area I was watching because this is pretty close to where we broke that trend line, just above it. And I don't know if it's pronounced Ryan or Ryan in our Discord group this morning pointed out these daily supports right here. Let's give you a recap of what I'm seeing this morning here. Then we'll do our year recap. All right, so I need to get these dialed in. I turn off the magnet tool. It annoys me. But you can see right through here we have these daily support levels, and this is kind of our last line of support. Now, if you notice, normally what I do is I watch the level closest to the breakout price. So my risk management was all anchored on this weekly 49.5 level. And perhaps I got that wrong. Perhaps the best level to watch were these daily. This particular day right here, the opening and closing price of. Hold on. The 22nd might be giving us more of our levels. So hopefully that still holds, and we continue this pattern of making higher lows. That would be encouraging if we could finally do that. All right, and then I'm getting some lag on my computer here. It's getting very laggy. Hey, Matt. Dot and Ada looking good to you? That's good. My headphones turned off. That's the problem. Okay. Well, back to the charts here. Let's see if I can get my orientation. Sorry, something was freezing on my computer. So, the biggest problem I see with this pattern is, well, I'm losing, my headphones died. I'm sorry, let's put these things down. Let's talk. I posted on Twitter, right? That's the area I was watching. The reason I was watching that area, and maybe not a little bit lower, and I did have, if I zoom in here, you can see I had that same general support. 48.6 was kind of my line in the sand, really. And so we've wicked down below that 48.6 level. We got down to 48.3, it looks like. And we've got a nice bounce so far off of that level. But the issue with that general pattern is, if we're looking at potential Wyckoff patterns, right, on which we've clearly been seeing a lot of Wyckoff patterns. This is the pattern I was kind of hopeful we were putting in as we were coming out of this. And you can see if I were to line this up side by side, maybe we can see a little bit easier, but you have this initial bounce, a little bit of a higher high, and then you have some kind of weak price action, but not a specific spring. And then you kind of eventually pop out, build this SOS and out. So what I was saying from a Wyckoff perspective, if this was that SOS pattern, in my opinion, we should have held that bounce level right there and not gone below it, which we did go below it. Maybe this whole formation over here is more of the SOS pattern. I'm not a Wyckoff expert, so I don't really know. But I kind of think that that's less likely now. We had a lot of the fingerprints of this type of pattern on the chart. Let's just look at that. And the volume is the other big piece. Like the people that are actually Wyckoff experts, they look a lot at volume to try to match up. There's certain volume profiles that these different phases have to really match. But you can see here the range-bound price action, and then a strong move up, and then it creates this kind of pennant of consolidation, and then off it goes. So what we're looking at was this sideways price action, and this potentially was a spring level if it was the other Wyckoff patterns, and then off we go. And so this still might have been a spring, this might have been your SOS pattern, and this might be out, and this might be the backup, right? So that also happens. That's also a thing. You have this, if this pattern is playing out exceptionally fast, you have a backup where it backs up to support. Here's the other pattern I'm kind of watching to see if we don't maybe end up following. If you can see here, obviously we've got the AR, the higher high, a couple of STs, a peak, and then a sell-off, a gradual sell-off into a spring, right? We haven't had this second significant peak in a spring. So here's what that would look like, right? Is exactly what we're getting now. If we were to get that sort of price action, too much fear and pessimism to be bearish immediate term. On-chain fundamentals still look great. Yeah, Victor, I agree. Let's see here. The comments are right in the way of my charting at the moment. Yeah, so I'm not looking for bearish patterns per se. I'm just trying to make sense of now. In my traditional TA, right, I took entries off of, if I just make it just as simple as just traditional TA, forget the Wyckoff patterns. My entries were coming out of this bit of consolidation here, right? My trade entries. And the way that I manage my trades is when I get a big move up like this, I didn't take any off up here. What I did is I moved all my stops to basically either break even or to in profit. And my buys were actually, what I did is I bought coming into this wick high right here. 48.3 was the level I was looking at. So I bought at 48.3. And so what I don't want is I don't want those trades to go red, right? So when we get this big breakout, once we got this first bounce right here, this is where I move my stop loss just to under that bounce right there. So this is why currently I'm out of my trades, and that's why I anchored largely. It bounced perfectly off of that weekly support. So when I see this fake out high and then we lose that low right there that we put in, after breaking out, it tells me that we might come down and retest lower levels. Either way, I don't want my trade entries to go from green to in the red, right? Or in the black into the red. But we can come all the way back down to this trend line. This is the trend line we were watching. This is the trend line that we ended up, breaking out of, consolidating right under, and then snapping right through. So what I'm looking for is, do we get some, downside price action and an eventual spring closer to this wick low area? Now the wick low came right into a monthly support. Let me show you that support area that I'm really honed in on. And here's the thing: this whole market, it's been macro bullish for a long time, but we keep seeing these kind of manipulated price patterns play out. So I have to be reactive and play what I see unfolding, and not what I want to happen, right? Or not what I think is going to happen based on fundamentals. All right. So this September price bar. So September opened right around 47,000. September closed right on 43.8. And then we got that strong bullish bounce out for the October monthly. October monthly closed above these other monthlies over here. Gave everybody a lot of hope that this was signal that we were going to be heading higher. And really, more traditionally, it should have been. But we got a very visceral, very strong reaction to the downside after a little bit more upside in November, and then a strong reaction to the downside. So at this point, we are range bound. The other problem is that this low that we put in December did take out the low of our October candle. So now we're looking at potential lows coming in all the way back down to the 39.5 level, the low of the September candle, since we took out the low on a wick, at least. Price action took out the low of the October price. So now our ultimate downside right now that we're looking for is 39.553. So dial that all the way back in here. Back to these trades that we were in, right, for active trading, and we're up to, again, we took the breakout over here. Don't want to let those turn red on you. So that's why I anchored my risk management right under the 49.5 level. Maybe a little bit too obvious, but we've come now into that 48.6 level, which is my area of last resort. Perhaps I should have left my stops at break even, or where they were, somewhere down here. But nonetheless, we're watching now is this area going to hold? So, and this is just I know on-chain fundamentals are bullish, and that's all fine and well, and we should bounce. At some point, we should get a strong price appreciation here at some point. But in the short term, I just don't know. There's no way of knowing if in the short term we get more downside. I mean, there's lots of things. Russia just announced that they were banning crypto. There could be unfavorable short-term news of all types that can cause, short-term price action. So when actively trading, we have to maintain a pulse of what's actually happening with price action, because those long-term fundamentals take sometimes a long time to play out, a lot longer than your positions can really handle. So those are some thoughts there. Let's see here. I really want number 2. This one, Wyckoff 2. 48.1 is a fib level, so we might test that before moving higher. It's also ETH low level on the daily chart. It's going to be a big thing, right? Sorry for my English. 48.1. 48.1. Yeah, so 48.1's that. So if we go down, is that a... So it's going to be like a 4-hour ETH level perhaps. Yeah, so it's the 4-hour low close roughly, or this is the 4-hour, yeah, right around. So the wick lows on my chart on Coinbase were right at 48K on this consolidation before it blasted through. So that could be a place to look for additional support down here, 48,150. That's the 4-hour. Be the 4-hour, or maybe there might be an 8-hour. Let's see if the 8 hours closed around there. Yeah, 8-hour closed there. The 12-hour, no, just the 8-hour. So this is a 4 or 8-hour, an 8-hour support level on this sell-off. So the daily actually ended up closing a little bit above that at 48.6. So anything in that range, really. And then again, if we go back to, you can see there's a whole bunch of support put in by that low move. If we lose that support, that's where, it's looking pretty likely that we go ahead and test the bottom end of this range. Of course, we've got monthly support coming in at 47,200 roughly, we'll call it, and then a weekly support level just below that at 47.7, I believe. Let me go dial that weekly in real fast for you. Make sure I've got it right on the weekly close. Yeah, I already had it pretty close. So 48.7, we'll call it, 46.7. But that's all the support we have on the way down here. So we've got a lot of support coming in through all these levels. Again, just this having taken place over and over and over again, you can see this accumulation pattern in this PDF I've got here. Let me try to zoom in a little bit for you. Right. That one's a pretty quick down, but you have this resistance over here. You put in a bit of a, right under the creek, and then you just drop like a rock all the way down to the spring level. This is an older schematic, an older diagram. But this is maybe a newer way of looking at it. But yeah, this appears to me like maybe what we're actually doing right now is we had those two STs. Again, we'll color that with on-chain. On-chain is going to give us kind of our clue as to is this, for me, it gives me my clue, is this accumulation or is this distribution? So this is also a pattern we could be in, right? We could be in this redistribution schematic. So if you look at it closely, I mean, you really don't know which schematic you're in, honestly, until you break to one side of this or the other decisively. So we did not decisively break to the upside. If I draw our top end of this whole range is that line right there, right? The 4-hour close over here on the 7th. We just wicked above it and got immediately rejected, not decisive whatsoever. And then the bottom end of all this price action is maybe this wick low right over here. Let's put this back up here where that goes. Put it on the 4-hour close. But you can see the 4-hour close right there just below. A bit of a spring looking type of price action where it closes just below some support and then it bounces. So, but if you look back at this schematic here, let's go ahead and just mark that chart up, right? So we have SC, automatic reaction, ST. Let's go find what we think are those. So I've got my selling climax over here. This is kind of the automatic reaction, I would say. Possibly, no, it's too early. This is automatic reaction here. Because then it did sell back off. Yeah, we'll call this the AR, automatic reaction. And then we had into, I'm gonna put this next to the schematic we're looking at right here. All right, and then an ST right there, secondary test at that monthly level. So we had the initial sell-off on the 4th, a bit of a bounce through the 5th, and then on the 6th we got a secondary test, and then we got a bounce on the 7th all the way up to what we'll call our the top of the creek, this top resistance level. So this is our top main resistance level. And I think if you look at that on a more traditional schematic, they call that the it's just the top of the creek. This is there's a term for this price action. This is the hold on, Wyckoff. I'm trying to find it. I'm drawing a blank as to what it's called. Wyckoff relation. There we go. It is a UT, I guess. Yeah, UT. So let's put that as a UT on here. The up thrust, right? I believe is what it's called. So UT up thrust is what that is. And then we go back over here and take a look at this. So down we go, and we have a couple of STs, secondary tests, and these can happen a couple of times, right? So we'll call all this more of this price action. Maybe these are our STs right here, these two. So you get that. You get this little bit of a higher low, and then a bounce, and then your two ST levels that are about the same exact level, right? So that kind of puts in our, yep. So you can see that the first ST level is a little bit higher over here. But then we get these ST levels over here that create kind of the bottom of our general range that we're looking at. I'm going to change this to like a obnoxious, easy to see color just for our whole, like the the range that we're in. This is just our price range. Okay. So we won't know basically exactly what this was until it breaks to one side or the other decisively, right? Again, we didn't break decisively here. We had an initial rejection. So now we're back to being range bound. If nothing else, we're range bound in this kind of pattern. And regardless of if it's Wyckoff or not, this is just range bound sideways price action. And we're back into the middle of the price action right now. Back into some area of kind of this is more of a pivot level that we've got here at that 48. 49K is more or less our pivot, I would say, for this whole price action. Pretty much in the middle of the range. So we just came right back into the kind of the pivot of the price action as of right now. But if this were to play out, obviously we would get, in theory, one more lower low below even these ST levels. And you see here I have this monthly. We've been watching this monthly level for a while. This bottom, the low, the close price of the September monthly candle. So there's a chance the spring could come all the way down here. Now remember, I've been wrong about Wyckoff patterns before, so don't take this as gospel. This is what I'm working on this as we talk about it, because I'm trying to figure out if this is being manipulated, and this could be where we're headed. Nonetheless, regardless of all this, where we're at ultimately is we're putting in, this is a bottoming pattern, and we're range bound. We're putting in a bottom or decision range, really, right? But you can see the wedge pattern that we put in. We broke out of that to the upside. Currently, we're coming back in to test kind of the midpoint of this price action. There's a chance that we just simply bounce out of here. If this is a Wyckoff pattern, this is being manipulated. Likely, we're going to see a pretty strong sell pressure all the way down into whatever price the spring action ends up being. And then we get our break to the upside, our LPSs, and then we get our SOS pattern over here, right? And get like this pennant formation. So what I was looking for was this going to turn into kind of a pennant formation? I was actually thinking, initially, I thought it was going to do something like this, right? But it did not. It got rejected, and we're now again in the middle of the price action. Knowing how these patterns have played out time and time again, this is our trajectory. Now, another thing I want to bring up was obviously we've had I've talked about in our Discord. I don't know how much I put it on Twitter. We've had some coins come onto exchange, which we have to be aware if that trend continues and we can continue to see coins come out. Right now, it's just a lot of influx of coins onto Binance. But if we continue to see a lot of coins come onto exchange, this is an indication that we could be headed for this type of pattern, this redistribution pattern, where what we just did was a UTAD. We're working our way down back to the bottom support line, and then we end up losing it, and we're in another markdown. Now, where that markdown would take us, is I guess possibly all the way back to 28K even. I don't know, but we're not there. We'll play that when we get there. Main thing is you see these kind of pink lines that I put up. We won't know really well where we're at until we decisively break to one side or the other. So we're going to need a breakdown, retest of that, and confirm this as resistance or this as support, and then we'll know that we're in where we're at as far as any potential Wyckoff patterns go. All right, let's take a look at comments. I've had this comment on here the whole time. 50. Sorry about that, guys. Yeah, I was just watching on Bitfinex chart. Good morning. Thank you. Order book looking chaotic this morning. Huge sell. Buy walls going up, coming down really quickly. Uncertainty. ETH looking a little more bullish than BTC. What do you think? Let's take a look here. So this is let's take a look at ETH real fast. Let's start with ETH BTC. See that relationship between the two of them? All right. So, yeah, the volatility, let's just think about this for a second. The volatility on the ETH to BTC ratio pair is definitely slowing down, right? So this was a pretty volatile move right here. This move still wasn't as moved. The move that we had from March through May on Ethereum, Bitcoin, still wasn't as violent as the move that we had, early 2018. Now, maybe we could get a bigger move than that, but it appears to me that that relationship is starting to kind of normalize. What I think this price action is here, this is the effects of the EIP 1559 upgrade, which has been burning gas fee. So instead of paying that gas back to the miners, it's been burning it. This benefits long-term holders of the coin as opposed to the miners, and they've already kind of moved that way, moving to proof of stake. This is a precursor to moving to proof of stake. This is the type of governance that we can expect probably moving forward, incentivizing or long-term holders of the coins instead of miners, right? And so ultimately there will be no miners. There will just be stake people that hold the coins and are staking them. But I think this break to the upside was a reaction to that. Now, the EIP 1559 upgrade is a pseudo halving, if you will, for Bitcoin. It's the same thing as the halving for Bitcoin, basically, that happened for Ethereum. And then we got the ETH 2.0 upgrade coming next year. So what I'm very interested to see is if this ends up being a false breakout, because these patterns in crypto, a lot of times I like to do a false breakout and then come back the other way. But this got rejected here, as far as I can see, at this swing high over here from May 2018. It's pretty much right around where we got rejected so far. Just coming back into the top of this flag right now to test this area, and right now we're into support right across there, right? So as with a lot of things, it's been fairly sideways. It is trending upward. So Ethereum is definitely stronger than Bitcoin as of right now. So while we have come into resistance, we still are in a macro uptrend. We're on the upside of this kind of consolidation pattern that we put in, and we could easily resume out of here. And if we were to resume out of here and break back above this, we're looking at probably a bigger sustained move. But if we continue, to consolidate here and end up losing this support that we're kind of sitting on right now, come back to the top of this pattern, we'll have to just watch as that unfolds. Now, as the USD chart goes, one thing I've noticed that we basically have been totally sideways since May, right? So the big move that we put in May, we've retaken that, took that price action out, but then have come right back into those levels. And I was watching the weekly support here, 3,900. This weekly support is kind of an important one for us to hold for me, just because if we're going to continue this uptrend, we really need to be holding these type of areas. And you can see this trend line I have here. It's kind of giving us our first sign that we might be in trouble. So we had this little bit of trend line. We lost that trend line, and then we're looking to regain it. We retook the more important horizontal weekly level right here and then bounced off of it. But we bounced into this trend line, and now we've lost the trend line and the weekly. So for now, that's showing some weakness, in my opinion, on Ethereum. And it's going sideways versus Bitcoin at the moment, really. Again, if you look at ETH BTC, we're really sideways all the way from May, right? So we put in this peak in May, and we've broken back above the September swing high that we put in, but ultimately we're back in this range that we were in before. And you can see that obviously we're putting in some consolidation here, another pattern, right? So this is a break one way or the other, might give us some indication as to where this is headed in a more short-term manner. What concerns me is, so Bitcoin dominance continues to want to try to put in a bottom here. And I know if you guys follow Michael on Twitter, he's posted this a couple times. He's got, I don't know exactly where his trend lines come in, but he's looking for some sort of marginally lower low, 39% or something, and then a bounce. So Bitcoin obviously can bounce for two reasons. One, for some reason the market rotates from altcoins into Bitcoin, and two, there's a broad crypto sell-off, and Bitcoin tends to sell off less than a lot of these more overheated, smaller assets. So, right now, we're kind of waiting for the market to tell us what's going to happen. Is this going to hold, first of all? If this were to lose this support level, we might enter like an alt season type of situation. I think this really is kind of the culmination of our alt season, though. If you look at it, we put in that swing high on Bitcoin dominance in late October. If you go look at the Bitcoin chart, right around late October was, when we put in that a new all-time high on 67K. And ever since then, altcoins have been stronger than Bitcoin, as is indicated here on that Bitcoin dominance chart. So this is an alt season, has been an alt season of sorts. It's been kind of a weak one, not the super exciting price action that people expect from an alt season like what happened over here in 2017, 2018. But this was super early frenzy speculation. So Bitcoin hit a peak and then a monster alt season. This has been a pretty lame alt season in comparison, but we're still coming to that same support area, and we haven't taken out the ultimate, this support area. We haven't hit those same lows either. So the question is, at some point we would expect a potential of altcoins really to get overheated and for Bitcoin to even lose the support level we're on. And that's kind of what I'm waiting to see if happens right now. If Bitcoin consolidates, and especially if Bitcoin hits this kind of like spring level, hits the bottom of these price action, and then altcoins start to really make a bigger move on the recovery. So they'll fall, altcoins will fall with Bitcoin. And then when Bitcoin hits whatever its bottom is going to be and it starts to bounce, there's a chance that altcoins could really take off. That is an indication that we're getting ready to roll over for good. My expectation has been and continues to be, because of multiple fundamentals, that we get one more kind of rolling top over here, right, early this year, and then we kind of roll over, and that's where we get, as it starts to roll this third time. I guess this would be 1, 2, 3, I guess almost a fourth, really. But if we get one more kind of rolling top over here to the early part of next year, when it starts to roll over, this is where I think we could see a really big move in Bitcoin dominance. So maybe we get a bounce in that next rolling top to, this trend line that we have here, something like that, maybe to the mid 40s, and then we have a really big exaggerated sell-off a move in altcoins, and then Bitcoin hits that level. But the thing that I'm becoming more and more resigned to is that this past price history is only going to give us clues. It's not going to give us any sort of blueprint, right? And so that's kind of always been my thought process, but it's becoming more and more apparent that we can look for clues from this price action, but we can't necessarily look for the exact same thing to happen. I got comments here from Michael. Hey, check with XR. What? Somebody asked me to check DOT. Let's look at DOT, and so. Getting to the lessons that we've learned this whole year. Obviously, we've all learned to deal with the clear manipulation and the Wyckoff patterns that we've been seeing. Right? It's way too. It keeps happening over and over and over again. So there's something to it, and we have to learn and adapt. Right? But let's take a look at DOT real fast. I was asked that early on. Polkadot looks fairly good to me. Maybe a potential opportunity here for an entry. My issue is, again, I've been hesitant. I took more altcoin trades all through here, and now I'm kind of, with the exception of a couple, maybe Polkadot and Cardano, I'm hesitant to take too many more unless we lose this level. And so what that would mean to me, let me just show you on a daily closing basis. This is the daily close. We put in over here, and we've kind of closed these dailies. We've got pretty close. We got a 39%, 0.98%. Until we close really below, 39%, well into the 39% range on a daily basis, then I'm still not. I'm looking for this to be a bottoming, so I'm not going to be too aggressive with most altcoin trades. However, Polkadot and Cardano are two that are setting up really, really nicely. So as far as I can see, Polkadot here, obviously he's been very range bound. Had a huge sell-off. We're getting that early bounce move right out of that sell-off. Go to the 12-hour here and see what we can see. I mean, this was a potential entry here, but it was right into resistance. So what I prefer doing is waiting for it to come back into support. So maybe this is a really good spot to lean into here pretty soon, into support, this 29.5 level. If we can close, see if we do have 4-hour closes below. We had a couple of 4-hour closes below, 4-hour close above. 8-hour closing basis, so 8 hours. Maybe the 8-hour is the one to watch. If we can close back above it on the 8-hour, but we've come back into this general area, and this is the If we go back here to the daily, the price is 29.56 is the price I've been watching. Really, if we close the daily at or above this level, maybe a good spot to look to lean in, because you know that you're wrong if you get below this wick. Pretty tight stop right there. It would be a nice position to attempt this breakout trade coming back into that level of support. So I do like DOT. Thanks for bringing it up. I've been wanting to put a position on it, but I've been waiting. Like, my problem is I got an entry signal over here, but I didn't like this support retest here. And didn't end up buying 27 because I was waiting for more confirmation that we were going to be breaking out. And so this resumption that we got over here on the 12-hour into the 29.5 resistance, I was trying to buy coming back into 27.20 myself, and we never got there. We broke through 29.50 instead. So 29.50 is now the new level I've been watching to buy coming back into this support level. But I want to see some confirmation that it's gonna be support. And so a couple of things I'm looking at here. I'm just seeing this right now. You know, these are, if we close back above it on the daily, very likely that we put in, you know, some higher lows, and obviously we have a trend of higher highs, and so we've got our trend heading in the right direction in general. So then the next thing again is, if maybe by today's close, if we close above that, then look to put a little position on there with that close, and a stop loss just below that wick at 28, you know, 70 or so. And if we were to lose that level, then we'll watch 27, 23 for the next potential entry. But that's, so Polkadot looks really good. Somebody asked about that. Let's take a look at checks XRP. Let me look at the actual comments in the stream here. It checks XRP with gritting. Oh yeah, we got this. I don't know. This got some spam. Sorry. Hold on. Hide user. Remove whatever this is. Hide user. All right. And then Shane agrees with me. Thanks, Shane. I'm glad you agree with me. I'm glad somebody agrees with me out there. If you look inverted in the chart, it looks like a lot like distribution pattern. Look at the inverted chart. Yeah. So an inverted distribution pattern would be an accumulation pattern typically. Hey, Michael, we're ranging a little more than I thought in that 48 to 51 range. Yeah. And remember, when I had Michael on, this is exactly what he called out. This range that this kind of, there's not been a lot of price action right in this range. So we're kind of just range bound in the same range that Michael was looking at. Marginally lower low on BTCD. And then we got a beaming face with smiling eyes. Morning, Anthony. Alt's gonna fly, yeah. Our new overlords love Wyckoff, which we appear to be BTC Wyckoff bottoming. BTCD Wyckoff bottoming. So this is maybe where you're getting your they do love the Wyckoffs, don't they? So this could be a spring low over here right at 39K. That's what makes this so tough, is that the Wyckoff patterns are literally engineered to give you false signals. And so it's the problem with trading crypto and Bitcoin, especially in the last year, another thing that we've learned in the past year, talking about a recap, is false signals abound. And so we kind of have to change, in my opinion, I've had to change my strategy a lot to account for all the false signals. And the way that I do that, how I've been able to better navigate as the year has gone on around all these false signals, and this range-bound market has been very tough, right? We've been just kind of range-bound. We've had some really good moves, but all in all, it's range-bound. So first, the first couple lessons I've learned is I'm a little bit quicker to take profit and move stop losses, especially when it's continued to be range-bound when it's not trending. I'm not very forgiving with my entries and my stops. But instead of taking breakouts, which give a lot of false signals lately, if you try to take breakouts of retest resumption trades or breakouts of trend lines, they do give a lot of false signals. This one was a good one, right? If y'all remember this one, it was a decent signal to the breakout over there. But a lot of times they give a lot of false signals. And so what I've been doing is I've been waiting for the retreat back into support. And if you look at this same thing I just called out, right? If you took this breakout, if you rode that too long and ended up rode this, so you're all the way back down here at the negative. If you wait for the retest, there's your retest right there, right? Wait for the retest to then start to watch price action unfold after the retest, and then watch for a bottoming and place your entries at a support level. This is if you're super long term, but this also works in short term trading. I've been waiting for. This is more Heath style. This is kind of what Heath does. Is he watches price action and he really defines key levels. And a lot of times he's scalping ranges and hoping for a breakout, right? So he's scalping a range, and if he happens to, he takes a little profit, and if it breaks out of that range and wants to keep running, he'll keep a portion of the trade on. But for the most part, he's just setting up scalps of ranges, and that's more what I've been doing, is waiting for a price to unfold, to find a support area that I like, that gives me a good, well-defined risk reward. Like for example, right here, I got stopped out because my risk was all anchored right under the 49.5 at 49.3, so I got stopped out over here at 49.3. Well, now I'm watching this price action, again from these entries that were initially over here at buying into support. So if I would have waited for the breakout all the way over here, right, it would have been much tougher for me to manage my risk. I'd have had to move my stops. I don't know, it would have been much more difficult, right? But because I bought coming into support over here, right, 48.3 I believe is where I actually made my purchases on the current trades I had that I just got stopped out on. But that gave me the opportunity to give the trade more room to run. After it put in this low, then I knew that, hey, I could put a stop under that low, and if it rotated beneath that, then I was slightly in profit. Same thing here. I'm looking at this price action here. I saw it here. And we can see it, potentially bottoming here. If we were to get back down to 48.569, 48.6 we'll call it, then I will probably go ahead and take another stab at trying to catch this bottom price action with a stop just below this area. These really small, entry, release tight stop entries, while I get stopped out more often than I used to, these are much smaller risk. So I'm basically putting very, very, very small risk on. So this ultimately might be, a 0.2% risk or something like that. But because of how tight that is, it's a pretty decent position size. So if it were to bounce and run, but that allows me to put in, to try that multiple times before I've lost, any reasonable amount of capital. So, and you see the same thing again. I was watching this level over here, same exact thing. My stop initially was right below that on this bounce out of here, right? So super tight position, really small position. So even taking a stop at 49.3, because of how small that position size was, obviously it could have been a much better win had I taken profit over here, which I did not. My target was 53,000, so we never hit my target, never took profit. But one thing I did notice, another thing that I've noticed playing out throughout this year, is these trend lines are generally pretty reasonable for areas to take profit. And this is something that maybe I need to dial in a little bit better. It'd be better about taking profit. You see these touches of this upward trend line. So if you draw this from this low to that low, we drop back below that, and then we found that trend line as resistance. So at one of these tests of this, I probably should have taken, especially this confluence of this resistance, should have taken some off there. I actually thought about posting this in our Discord, but I didn't want to confuse people. Should have taken some off right there, because you can see there's a confluence of resistance from this trend line into that area. So that would have been very helpful. And having more of a scalping mentality, especially when you first start a position and you're trying to be early on the turn like this, having more of that scalping mentality of taking a little bit of profit into these resistance areas and then letting the rest run. I think as 2022 unfolds, I think that's gonna serve us well. That type of discipline and being maybe a little bit more scalp oriented, being tighter with our entries. Coming into support, being okay with being stopped out a few more times because of how small the entries are, but being better about taking profit when you see confluence of resistance. And the reason, I know Michael's here and he firmly believes that we're going to have a blow off top, but the amount of time that we've spent at these price levels, this whole area, when you think about it, when we do break above here, not if, but more likely when than if. We do break above here, this area is going to be a real big magnet for price to come back to, just because of how much price action there was here. So when price does come back, this is going to put in quite the floor, obviously, for future price action. But the weight and the volume of these moves, I think it's just there's too much indicating to me that there's just large players who are very smartly exiting And what they're doing is they're tamping down. This could have been a blow off top right here, right? But somebody was selling into this and tamping down, and then we rolled over. And the same thing here. We had people selling into these moves. So there's just too much of this consistent selling into these moves. It's not a sharp enough, move and then a bounce. So I guess I have a dog in my office. I didn't even know that. So over here, I know people keep comparing this past cycle over here, past price action. But you look at this, these are very quick pullbacks and resumption. And it never lost momentum. It's this kind of constant upward momentum until the momentum finally rolls over, right? We don't have that same kind of constant upward momentum. This is more of a slow rotation around this way than anything. Now this, we had that momentum blasting up through here, but then we lost it. So, anyway. Point being, I think having more of a take profit mentality on trades and being more selective with our entries coming into support, those combination of factors should serve us well, I believe, going into 2022 and managing the new realities about how this, the manipulation we're seeing in the market and how larger players just trade, right? We have larger participants in the market and they trade differently than retail trades. Let's take a look here. Comments in the way again? Oh, sorry. I didn't take it off. Okay. Well, I'm going to put your comment in the way. BTC should bounce, need to play out. That's my view until we make new all-time highs. The rolling top case for Bitcoin would be 177K diminishing returns move I put on Twitter. It would be February 20th when the rollover would be about midway out. 177K is quite the move. But yeah, based on weekly fib extension levels right now, the highest I can see us going in the next bounce. Now that could be the fib extension levels that we end up charting the big move on. But as of right now, it looks to me like is that right? Oh, I got too much junk on this chart. Let me go find a clean chart. Let me just, what? I need to do like the layers and get rid of some of this junk on this chart. All right, let's look at this weekly. I don't like TradeStation's feed. There we go. Gemini's feed. All right, here's the weekly levels. Let's look at the last weekly extension. Let's see if we did get a breakout here, right? So this is our... Normally I'd want this week to finish playing out. What we're going to do is we're going to go ahead. Yeah, I don't have anything good to work on. This is really the weekly fib extension level for the past completed extension. From this last bullish candle to the bearish close to the bottom. 57K is that particular extensions. I thought I'd mapped out a weekly extension. So if I take this, basically this whole candle, this last week's candle, right? So basically I'm just taking the range of this green candle right here entirely, right? Take that impulse. 72K is kind of our top for our next move. Now, I guess, granted, should we blast out of here and get a new fib extension, say the low is put in already, or let's say this week turns green. What's today? Yeah, so say somehow this week turns green, which could happen, and we go all the way to 72,000 for our next extension, and then likely, it depends on where we'd come back to. Like, let's say we come back to the top of this price action, 53K or something, a lot of love we've been watching. That gives us a 165K 4236 level for an early next year potential top. So that's a potential. So yeah, I mean, I guess it's possible. What we'd have to do is we'd have to break out pretty strong here in the next few days. We'd have to put in that early top in the low 70s, come back to the kind of one of these support levels. I guess if you give it a little bit higher support level, right? If it bounced right off of that, let's take this weekly high right here. If we bounce off of something like that level, these lows over here, I could give you a 177. So if we hit the top end of hit the top end of the next weekly fib level based on this move here, and then you measure the next weekly fib after that, yeah, you could get up to the low 170s at a crazy move. So I guess it's possible measuring that out. And we did talk about that, right? That was kind of my just rough guesstimate. And it was more based on if I just measure this move here, we'd have to get a move that's kind of from the October. We'll just measure it from October to the peak. That was a 500% move. We would need to get a move that looked about like that. So say we put it, anchor it off of these recent, we'll just anchor these recent lows to give us our best case scenario. Where does 500% put us? Well, you know, we'd have to have some sort of catalyst to get us there. I don't know where the catalyst is going to come from for this type of move, but just 270K. So I think perhaps if I go back and anchor it all the way back over here to these lows, and then a 500% might be where I was getting that math from. There you go. There's the math. Okay. All right, there's your 170 move. All right, so if you know, from the lows in July, the summer lows, if we have a similar moves, this was 500% in 189 days. Let's go 189 days. We're almost there. We'd have to like break out crazy. Problem is obviously we had a lot stronger price action coming out of that. Maybe the better way to measure this would be to say, okay, take this first sell-off, and we'll take our first sell-off over here. Now, I don't know. I don't think there's any good way to do this because of these rolling tops, but I don't know how I came up with how we came up with 177. I know you and I both came up with right around that same level. I just can't remember exactly how I came up with that price myself at this moment in time. All right, Wind Moon. I'm gonna say 2025. I don't know. After the next halving. I think this halving is a bit. I don't know. The fundamentals continue to set up pretty interestingly enough. Let me show you all this though. More things that we've learned throughout the year. I've taken a different stance around how to read derivatives and on-chain. Fading on-chain a lot actually lately. Less enthralled with the data on-chain gives us as time goes on, just because it seems to be a lot of times potentially manipulated. There's a pretty good correlation with a lot of coins coming onto an exchange and a dump right after that, right? That's pretty good. There's been a couple of times there's been a lot of coins come on exchange and nothing's happened though. So that's the problem, is it gives false signals a lot. But let me go change all these charts to just like the 3-month, just so we can kind of get a recent view of what's going on with different exchanges and the balances of coins on them, right? So we've been watching for a warning signs of a lot of coins coming on exchange. We're kind of getting that. This is the other reason I went ahead and dialed in a lot of my risk management and just kept it and just left my entries go ahead and get stopped out here, because these last several days we've seen 1, 2, a neutral day, 3 days. In the last 3 of the last 4 days, we've seen nearly 10,000 coins come on to exchange each of those periods. If I zoom in more on this, you'll see it more. But yeah, we went from pretty decent increase in coins on exchange here the last 3 days. Now it's all coming in on Binance. So you see here, Coinbase has been very flat. We had a big buyer move a bunch of coins off exchange back here in October, and then it's been flat since then. Then we've had this pretty big appreciation. If you go back to September price action, there's a lot of coins that have been coming onto exchange for Binance this whole time. And then Hobei, which is most of the this is a large exchange for China. Obviously, because of the bans in China, they've been selling, and that's been a big drawdown there for them. So let's take a look at the data feed. So these are all things that I've been watching. Now again, I've been kind of fading this data a little bit. Now I'm gonna be right back. I'm gonna put on some Doge-wave here for just a sec. Oh, I've got music playing in the background. I gotta go, be right back. All right, I'm back already. The Doge-wave didn't pull up. Come on, Doge-wave. All right. I'll have to close that for now and reopen it. All right. So, so as far as derivatives go, let's go take a look at some of the derivatives. You know, perpetual funding rate, I was noticing was inching up here a little bit. It was almost a 0.001. Not really a significant level, but obviously with the sell-off, a little bit of sell-off we've had, we got a little dip in it, and we'll probably get another dip in tomorrow's reading. Or today's daily close today, the reading today will probably be a little bit lower. Open interest continues to inch up. Now, I'm not sure how concerned I am with open interests inching back up, just because over time, open interest, that means the amount of basically derivatives that are futures that are open against the asset should continue to climb over time as these assets mature, especially Bitcoin. So generally speaking, I haven't been too concerned with that, but you see a sharp rise in OI, you can bet that open interest is going to get wiped out one way or the other. And we've been stacking for quite a while, really, stacking some open interest on the short side, but there really hasn't been a lot of shorting. That's the other thing that's kind of interesting about this whole market is that nobody's really super heavy shorting Bitcoin. There hasn't been a massive move to short Bitcoin recently. So, this is really spot selling that's causing these drawdowns to happen. So that's what's kind of interesting about all that. Let's take a look at some more comments here. This next BTC breakout will be leaning in to with more leverage than before. I think Moon next. Well, if you get some, yeah. So what we have to do though, the next breakout, we need volume, and we need to break this range that we're in as of right now. And so I don't blame you. For me, I'm just going to cool my jets until we get out of this general range. I think I keep saying that, and I keep getting goaded back into taking entries because something interesting happens. But this general range right here, we just need to get back out of this range one way or the other, and then we'll know. And especially if it breaks out volume, right? That's going to help us. In theory, again, because we've, I guess, if you look back at these patterns, I'm just looking at this on a fresh chart. We've got this up, down, but I don't like this losing this low that we put in here. Just doesn't feel to me like we're headed for an SOS type of exit, right? It feels more like this on the down. We're on the down slope. Let me zoom in on this pattern here, right? So what it feels like, what we've got going on right now is we put in that top, we got an immediate rejection, and we're just kind of on the down slope here, waiting our way back down to the spring. Because when you get after the spring, whenever you're headed for that SOS pattern on your way out, you keep putting in higher lows, and this is a pretty significant lower low from that last swing low. So this is what gives me. This is exactly why I think, just because we lost that right there, why I think we're headed back to the bottom of the range before we get our decision. But if you're willing to lean into that, that's not financial advice, obviously. Oh yeah, y'all guys are talking about some stuff. When Moon. All in next breakout, yeah. So that's up to you guys. I will continue my. I'm all in that. I'm still fully invested in Bitcoin. I don't see any reason to sell because I lost my opportunity over here. This is my opportunity to sell, right? And I messed that up. I didn't sell the 50-day. I got probably caught up a little bit in, on a little bit too focused on some on-chain data, and that was kind of a false signal as far as I'm concerned, right? The on-chain takes a while to play out, but when I saw this 50-day get retested. Again, and I was also on vacation that happened right before Thanksgiving, so I was headed out of town. So it didn't give me a chance to really analyze that, but I should have taken the opportunity to trim spot positions coming into these resistances that we created here. That would have been very helpful, but I did not do that. So this has been all leverage plays down here for me trying to play this very difficult range bound. What makes it really difficult, again, you get this type of pattern, you get a breakout of this pattern, and then just immediate rejection. All right. Buy the dip. QDizzle, yeah. What do you think of Matic right now? Let's take a look at Matic. As far as buying the dip, I would say on Bitcoin right now, right, we're in this decision range. The bottom of that range is the area to look to lean into at this point, in my opinion. Let's see here. Crypto, Matic. So I said it's got this versus Bitcoin. Matic's in kind of a precarious, putting in a bit of an ascending wedge pattern. Yeah, I would tend to think that this is probably going to break down and give you some consolidation below this, especially think about where Bitcoin dominance is. Again, Bitcoin dominance is trying to put in a floor. Maybe it puts in a marginally lower low, a spring, and then bounces out of here. So you can see a lot of these alts that have done very well versus Bitcoin. I do think probably this ascending wedge is going to break down, and we'll get a retest of this kind of median swing level that I've got here in orange. And look at it on the USD chart. Same general thing. Got a breakout, immediate reject. This is a trend in crypto. You get these breakout of all-time high and then immediate rejection. The last time we had all our fun over here, breakout, and then just blasted, right? So as of right now, I mean, it's not looking terrible. Obviously, it's very strongly appreciating upward. Broke to the upside of this pattern we were watching, but I don't really have a good read for you in that. Maybe this is a bit biggest help we can get, right? So you kind of come back and you have this launch trend line here. Should you get under this launch trend line, doesn't mean that Matic's going to sell off or crash or anything. But if Bitcoin were to head to the bottom of the range and that little bit of sell-off gave us a bounce in Bitcoin dominance, and or when Bitcoin bounces out of there, if that bounces on Bitcoin dominance. But I think if Bitcoin were to sell off to the bottom of the range, you're going to see Matic lose this trend line, right? This launch angle trend line. And then you can start to try to see where it wants to put in, if it wants to put in a floor again and trade that. But yeah, I'll be watching this trend line, and we've got, I guess it's kind of an ascending wedge too as well on, kind of, not really. Let's start here and blast back this way. Yeah, it's not super clean, but you get the semblance of an ascending wedge pattern going on here on Matic as well. Could break down. So this is not a place I wouldn't be looking to lean in here to Matic. I mean, these all-time high breakouts have not been working out as well as, especially lately. We've seen several assets barely break their all-time high and then come retrace right back in to the range. So I would be very cautious about overplaying this right now. It's a good asset, so I mean, if you have a hodl bag on it, it's just keep holding. I would say, but or if that's what you prefer doing, but I wouldn't look for it to appreciate. The more important thing is whatever your base account is, if it's Ethereum or if it's Bitcoin, just check that chart versus your base asset. And right now, Matic versus Bitcoin is looking to me like it's a little bit exhausted and it needs some time to consolidate here. You see, right, this big move, exhaustion, and then this is what consolidation looks like. Another pretty big move and maybe some more consolidation up here, that would make sense to me. But it could also break to the upside, right? So of course, Matic, it's a very strong asset. It's been doing very well. You can look to lean into support when these things when you get to the end of when you've had a really strong trend for a period of time. I treat the getting close to the end of the potential exhaustion of a trend like I do the early turn. If I'm wanting to take trades at the end of exhaustion, because what I don't know is maybe we actually have like a really blow off top coming out of the top of this pattern, right? If you're going to try to play this, just keep your risk management really tight. And an area to look would be if you break above, close above that, bounce back into that area of support, that trend line, and then off you go. That's a potential play. But for my trading style, this is kind of played out, right? I would be just sitting on the sidelines until I saw some consolidation, and I would be wanting to then, once I see that consolidation, I'd be wanting to identify areas of support to buy into before the next impulse to the upside. So my opinions on that. What do you mean that BTC chart could be a bottom, but greater risk the BTC could break down more? But to me, greater risk. I see what you mean. Okay, yeah. Do you use a daily too to look for entries? For the most part, I do entries. Well, I've kind of quit using like when price takes out a certain price of a certain candle to the upside because I'm buying into support. So I use the 4 hour for just like looking at real fine-tuned price action and trend lines and things like that. And every once in a while, I'll look at the 1 hour if I'm really trying to see, like I'm trying to dial in some trend lines like this. Like if I really want to get a trend line really close, I'll go to even the 1 hour just to get the trend line. Like, and that, like, see, like that little bit of adjustment that I did. Look how close it, it just got us that much closer to that actual price action right there. But I generally use the 4 hour for trend lines and most of my like real fine grain analysis, and then I use the 12 hour more for trying to decide if I want to do an entry. But I think I would say honestly, these days I'm more between the daily, the weekly, and the 4 hour. So it's pretty much my system has become looking at the weekly levels as my primary levels now, looking at weekly impulse levels. So let me back up and recap why I've moved to the weekly levels. Crypto trades so fast, faster than other markets. So those of us who came from equities, or maybe those of you that came from Forex or whatever other market you're in, we're used to assets moving so much, a lot less volatile, a lot less, a lot less volatility. And so where I used to use daily levels, now what I found in crypto's weekly levels are actually, because of how fast moving most of the assets are, weekly levels are more beneficial than daily levels, and that includes support and resistance and my fib levels. So I anchor fib levels nowadays on weekly moves, and I anchor my main support and resistance on weekly moves as well, the weekly close levels. And then I go to the daily. The daily is where I find, the more short-term support resistance areas, and the daily is probably normally where I'm charting my support and resistance, and then I'll probably actually take my entries more often than not on the 4 hour. And what I'm looking at a lot of times is I'm looking at a level that I've identified either on a weekly or a daily level, and I'm looking to see if I get what kind of price action I get at a 4 hour level. 4 hour closes above or below. So I think probably my style has moved more to 4 hour, daily, and weekly. Like the 12 hour chart, I don't use it as often. I talk about it a lot, but now that I think about it, now that I'm answering your question, honestly, I don't use it that much because I'm not taking these breakouts. I'm not waiting for a retest resumption as often. Sometimes I do. And if I am going to take a resumption, if I get like a really small, consolidated, compressed 12 hour retest candle, and I want to go ahead and just wait for that 12 hour candle to be taken out to the upside on the resumption of that rather than buying into support, then that's when I would use a 12 hour candle. But it's not super common anymore that I'm actually using a 12 hour candle. So yeah, really it's probably more the 4 hour. I want to see how price is responding, what the 4 hour closes are doing around the levels I've identified, be it their daily levels or weekly levels, and then the fib levels too. When I do put fib levels on my chart, like this price action, I see no reason to worry about fib levels because, as you can see, price is very well respecting the levels that I've got mapped on here, right? And those are just using weekly and daily kind of Heath levels. So because price so well respects those levels, I don't worry about doing fib levels on range-bound assets. Now, when we first had this sell-off, right here, I, of course, like everybody else, I went and put a fib retrace on this level, right? On this, and you can see that we hit the 618 level right there, right? So from that wick to that wick, all the red, 4 hour candles through here, we hit the 618 and got rejected. So that's super helpful. But now that we've been range bound and we have a lot of price action to work with, I'm not continuing to use those fib levels because you'll probably see if I put it back on here. Those weekly and the weekly level right there and that, the 0.5 level are pretty close together. The top of the range is right around the 0.618 level. Let's see here, what do we got? These daily supports are just above the 382 level. And that 382 level, that 4 hour area we talked about earlier, is right at the 382 level. So the market's going to kind of normalize self-fulfilling prophecy style. The bottom of our range is right at the 236 level, that I've identified here, and then of course the very bottom. But these fib levels just become noise at that point for me. Now where I use it more is the fib extension level. I haven't got to use fib extension levels for a while. The only time I got to use fib extension levels is over here. The last time we used fib extension levels on Bitcoin specifically was all this price action over here and then just this little bit here, because even over here we weren't in price discovery. I had lots of levels from prior price action to work with. So, you know, there wasn't a lot to do with fib extensions over here. I think I did throw some up there. But you can't. So, yeah, I hope that answered your question. Daily. I would say nowadays, yeah, it's actually the 4 hour is what I'm buying and selling on. It's more the 4 hour to see what's closing, but everything is mapped on weeklies and dailies. You can also buy into resistance since they appear to be letting things run above and below resistance the first go. I disagree with your magnet theory because the taper is not happening. We had a long time of 2020 price action that we didn't come back to. Yeah, so let's Michael, let's just map that out for a second. All right, so this was the prior all-time high. Right, and so we do get gaps in the price action. So this is our gap that we've put in now from the prior, the 618 gap right there is at the 1618 gap, I believe. So this is the gap that we put in. Over here, you know, when you get into the quote-unquote bear market, you can see here, after you've made your blow off top, that price does become a magnet. So you see, you know, again, I kind of discounted this price, this history lesson earlier, but this is some of the more valuable history lesson. You see how these levels really worked out, right? So that was a magnet. There was a lot of time, you know, there was a lot of time price spent below that. It didn't spend a whole lot of time, and then spent a lot of time above it, and it became a magnet for price. So price held up above that for a long time. But this is pretty short-lived price action in here, right? Compared to all this price action above it and all this price action below it. There wasn't a whole lot right here in this little area. So when that collapse happened, the capitulation happened, that's the area that it stayed in for a long time and kind of filled that area in. Now, of course, if you go back long enough, Bitcoin does, like we talked about, put in these big gaps between cycles and halvings, or has been. We'll see if that continues going forward. I don't see any reason that type of behavior doesn't continue going forward, where we get a big breakout of the prior all-time high. So after the next halving, so say 69,000 is the top for this whole cycle, right? And we're all just wrong, and it doesn't ever go higher than that. The next halving, when we break 69,000, that's when we'll put in a huge gap and never come back anywhere close to 69,000. You and I both suspect that there's probably more upside left in this market early next year before we're totally said and done. If that's the case, whatever that price is that we put in, right, whether it be 160 or something, most likely that if that's even a 3 drives kind of blow off top, we're going to get some price action above here. And then you're going to collapse back down and capitulate right back into these areas as that magnet area. And then maybe you quickly resume not too long after that as the next halving starts to get priced in. Because I do think this time the market will be better about pricing in the next halving, which might be, to your thesis about a shortening bear market, obviously might lend to that as well. So those are my thoughts there. But yeah, there you go. All right. Do you think the bull market is over and we'll see a prolonged bear market? I do not. And now, I don't think the bull market's over yet for a lot of kind of fundamentals reasons and just looking at kind of the macro situation with inflation and everything else. I think all assets have to keep going up, and Bitcoin's been so sideways for so long. I think this is the last of, to my opinion, this is the last of the manipulation to shake everybody out. Probably going into early next year. At this point, it clearly looks like this was, this is that trap move that we put in, and now we're headed for a spring. So this created the creek, if you will. So this is this area. So I'm going to redraw this. This area of support's dead, but now we have our creek. Right, this is our creek that we got to jump over. So this is that, like in Wyckoff terminology, this is that creek now. Let's make this like yellow or blue for creek. There you go. Make it blue. I do think that we're more likely to get a strong bounce off of a much lower price over here. And should we get that, I do think we put in a little bit higher highs again one more time. Now, I'm not in the 400K camp. I'm in the we'll be doing good to get into the, I could see 177. I really can. I think it's not impossible. I would be a little bit surprised if we actually do get to 177, but I wouldn't be, I don't know. I wouldn't be too surprised. I would be pleasantly surprised. I mean, I'm pretty well invested. I'd love to see it, but maybe the more pessimistic side of me, the more cautious side of me thinks that maybe we roll over at like the 80s or 90s and just really just mess everybody up this whole cycle. But we'll see. Extend from the bottom of summer, but what is the extent from 64K top to the 30K bottom? Well, you can't. So on weekly fib extensions or fib extensions, let me find a clean chart. You don't do fib extensions based on a sell-off, right? That's like there's a retrace. There are retrace levels based on sell-offs, but extension levels are based on the impulse. So if I take from the best case impulse scenario we have, if I go to a monthly impulse, so the last red monthly is the beginning of the impulse, right? So this is an impulse from this low over here through this, and then the bottom of that red, and then the next impulse is this move here in the bottom. Okay, so what I have to work with on this monthly is, we'll call it, I'm going to go ahead and just do a fib extension based on this last monthly that I see here. So I'm going to take the bottom of this, the green move, right, when the candle was first green, and then I'm going to go to the top of this green move and then back to the bottom of this red move. Okay, so this is the bullish advance, the bearish retrace, right? So you could take this wick high. What I'm doing is I'm taking the two bullish months, the two months that were actually green. I'm taking the low price and the high price, that whole impulse, the bullish advance, those 2 months, and then I'm taking instead of taking the wick high over here, I'm leaving it at the wick high from August, and then I'm taking this bearish retrace. So within that context, what we've done is we've come up to the 1 standard deviation level, and that's pretty much what we got initially rejected, and we're coming back into now the 382 level at 47.7. The top end of this whole move, should this actually continue back out of here, now it won't because we've had these red candles. We'll have new areas to work with on the next green candles, but the top end of this move would have been 129,000. Now we'll have new levels to work with, so let's go look at what that would look like. So I'm going to go ahead in this case, and this is subjective, remember. So I'm going to take the bullish advance from the bottom of this red candle when the bulls took over. We're going to go optimistically to the top of this red candle, and then I'm going to go back to say this was the low. Okay. So I'm going to anchor my impulse as the September low to the November high, back down to the December low. And if I use that, I get a 172 for 236, top end breakout level. And so far, if this is the bottom of this impulse, right, this is the bottom of the bearish retrace, based on this last impulse, the next monthly impulse, so if we get 2 or 3 months of green, so say January, February, March, and April are all green, in theory, that would give us a exhaustion point. Now they can go to the 5.236 as well. This is just at the 4, you're like in really overheated territory typically, by any metric, and really it's pretty rare that you make it all the way to the 4, right? A lot of times you only make it to the 1, if you're on a really good breakout. But the 4.236, which would be kind of, you're looking at really heavy exhaustion on the move, which is at 171. So that's maybe more realistically, based on this last impulse, what I could see. And this is an optimistic impulse, right? So I'm taking the bottom of this bearish candle even, and I'm going to the top of this bearish candle to get the full breadth of when the bulls took back control of this whole move, and then the bearish retrace. Okay, 177K is from the blocks. Yeah, I came up with this very similar. I was mega bullish before. Yeah, I was. But remember, we have to change with new information. I'm sorry, but we did. So this pattern was bullish, right? Let's just recap. Where was I bullish? Remember, everybody. So you said mega bullish before Christmas, right? So what I was looking at was we were consolidating below this trend line. We came back into the support level, and so this is where I was bullish right here. Is a break of this consolidation pattern that we were putting in. that would give us that should give us a good impulse. It did. It gave us that good impulse. But remember, I'm constantly updating and evaluating. I think I had this drawn as like a descending wedge. Yeah, I did. All right. So when we retook this, we bottomed out here and turned around over here somewhere. I don't know exactly where. I think it's like 48.3 was my entry. I believe anyway. So this is what I was bullish about. This pattern, right? If you look at this from a macro perspective, this could have been a spring and a Wyckoff pattern. This could have been an LPS, but I'm not a Wyckoff trader. I'm not beholden to that, right? This could have been our first LPS, our second LPS, and then our SOS pattern, and then off we go. Right? This could have been what was in front of us. But what I saw clearly was we put in a pattern of, all right, we had a marginally higher high, and we took out this high right here. That's what gave me a clue that we're headed higher, right? Is we wicked above that high after taking out this high. It was a one standard. So coming back into this was the area I was looking for to go long, and that's what I did. I went long there, and we got that big bounce back to the top of this. But it was a breakout of this bullish kind of pennant, we'll call it. It's not really a pennant, but descending wedge, but it's a bullish structure after an impulse. An impulse into resistance, into this trendline resistance, into that weekly resistance, and then a bullish pattern, and then a breakout to the upside of that. This is what caused me to get to be bullish. But then we came into resistance here. This gave me my insight as to, okay, this is where I know I'm wrong now, right? So I started calling that out. If we get below, and I put that on Twitter, right? That's literally what I put on Twitter. If we get below that area of support, then we're wrong. So looking good, but still tight stops, caution on trades until we get back above the 50 and the 120, right? I'm still cautious until we get back above here and really regain momentum. And I can confirm that we've regained momentum. And I said breaking back above the 50-day could really send us at that point. So that was bullish structure. We broke to the upside. We got a bullish move, but we quickly, ran into the resistance and turned around. And so again, once we had that first bullish impulse and we hit that first bit of resistance, when we came back into this support, you see, it came right into that swing high right there that we put into the resistance of this trend line and that weekly resistance. We came right back into the same weekly resistance that we came into resistance there at the trend line, and then we got a bounce. Either that was it needs to bounce and go, or it's this move is over and we need to flip back to being bearish when this low is taken out, and that's exactly what I've done. So I know I was bullish, but I thought I made it pretty clear. This is, for me, this was our area that we knew that we were wrong. 49,483, as I have identified on this tweet. If you lose that, you've got to go back to being bearish, or maybe not bearish, but maybe more neutral. That's where I am now. I'm really neutral more than bearish, right? As far as trades, I'm just neutral in trades because I don't know what's going to happen next. All I know is we've lost this swing low. We got that bounce, that a rejection. When you get that rejection and you lose that low, that's now I have to become more cautious, right? Maybe not bearish, but cautious. And so anybody that, I've got people this morning that were all angry at me, calling me a flip-flopper. I'll just ask you this question. Was I not correct in identifying that this was a bullish structure and that a breakout was coming? I think I was correct, right? We got a breakout from 48.3, which I called the entry, all the way up to 51.3. So that was a $3,000, $3,000 move. Not an inconsequential move, a 6% move up. But then I identified the low level too, right here, right on that little bit of a sell-off. That swing low right there gave us our insight, and it came right into the weekly support. We got a good bounce. Now, of course, price could have, and at this point, I wasn't super bearish just yet on this initial rejection because we could have bounced off of any of these levels, and we'd have been just fine. Just had to stay above that. But when you got that initial bounce, but when it came back below that, that's time for us to change our tune. This move is played out, so we got a bullish move out of this, and that's all we were going to get. We wanted more, but we didn't get more, and now we have to update with what the market is telling us. So. Like I said, I know I was bullish, but on-chain is more macro indicator network health than predictive of price action, less so. Yeah, I think this is becoming clear, Michael. Let me go to the beginning. 300K is less than a 50% move from 177. Let me go look at your. Did you make like a little face over here? All right. Let's see. I'm gonna read. I'm just gonna blast through some comments here. 300K. I think 300K. All right. Well, we'll see. The 300K thing. Just like I did with Miles. Like I'll take the same approach I took with Miles with you. Like I would be happy to see it. I'm well invested in it. I would be happy to be wrong. I don't think I'm wrong, but I would be happy to be wrong about hitting 300K or 450K or some other number like that. I also think we are yet to see the real spring. We need something that really shakes the weekends. Yeah, that's what obviously we're headed for right now. That's what's kind of clear. So, yeah. Sweet Hanks, Brandon. Money spreading so thin in alts. Yeah, I'm a little worried about alts, to be honest with you. It's overheated. Can you do the GRT? Yeah, let's look at GRT. It's a fun one to play. The graph. This is versus Bitcoin. I don't have a GRT USD chart because, frankly, I just don't care about what it does versus the US dollar. I want to stack sats. Yeah, I mean, it's coming into it's kind of bottoming here. I don't look for Wyckoff patterns. The only thing I look for Wyckoff patterns on, by the way, are Bitcoin. I just don't care to even mess with it on smaller assets. They may be happening, but again, using my more traditional TA methods and momentum trading methods, I'm generally speaking, I can navigate around Wyckoff patterns however they unfold anyway. So we got all the moving averages here printed, which is nice. It's been trading long enough on this particular chart. Yeah, so I had these daily levels from way back over here. Probably need to update those levels now. This is old charting I've done. But, we're definitely trying to come to put in a bottom here, like a lot of things in crypto right now that were beat down. I need to move a lot of these. This is way too far off. I don't need to mess with that. Okay. Yeah. So, obviously we're compressing here. This price action is definitely slowing down. Price is definitely getting compressed as something's getting queued up for a move one way or the other. I would say versus Bitcoin, it looks to me like it's the bottom of the range. I mean, this is ultimately the low that we put in over here after the project launched. At this point, I mean, I would wait for the moving averages. Honestly, you look at this. You're so close to these moving averages; they're all nicely compressed together. This is a really good scenario. I love when I see this happen. You see all your moving averages getting compressed. And the 50 is below the 120 is below the 200. So what's going to happen here is once you break out of this pattern over here, you're going to see obviously the 50 more decisively turn upward than the other ones. When price is trading above, a couple of these moving averages, you can start to look at taking entries. But especially when they all curl upward and curl around, as you retreat back into those whatever the areas were of this breakout area. Really good place, really solid place to look to take entries at a more macro level. And this is hodl behavior, right? This is how I look at it. So this is setting up to me to be a nice rotation into for some period of time for like a hodl bag type of thing, right? This is obviously from a technical trading perspective, you get to outside of this, you're starting to put in a little bit higher lows over here in a short-term time frame. This swing high needs to be taken out to kind of confirm the reversal right over here, I would say. But you're putting a little bit of a higher low. That swing high, taking that one out will be helpful. But if you take that out, retreat back into the moving averages as they advance, that would be a beautiful spot to look to add for like a long term. Because the way that these moving averages are compressing, if you get all the moving averages, if you get this breakout, you're going to get all these moving averages curling upward beautifully. And you're going to get the 50 crossing the 120 and the 200 and the 120 crossing the 200. And as all those moving averages move up and you flip and the 50 is on top, the 120 is below it, and the 200 is below it, and they've all just crossed each other, any move back into that area is a great place to look to acquire for a really long-term hold. And this one's setting up nicely for a really nice long-term potential. And what you do is when you're doing that accumulation style, long-term style, you can simply play the moving averages, right? As price advances, you're going to have your 50 is going to be hugging you more than the others, but the 50 will probably, obviously it's at the 50 days, it's not like the 10 or the 20, so it's going to lag a little bit. But these moving averages are going to advance. And so you're going to have a really good opportunity to, if you want to add to your position over time, add a little bit in the 50. But if you lose the 50, trim a little bit, lose the 120, trim a little bit, come back into the 200, buy. Right, the 200 is going to be your institutional moving averages. Buy all that stuff you trimmed coming off the 50, coming off the 120, like after prices advance, like months from now. So this is how this is a quick recap of how I do, like more long-term hodl positions. This chart's setting up beautifully just to discuss that. All right, let's just walk through that exactly. This is pretty much like. You can tell that price is really overheated too when it separates a significant amount from a moving average. So, obviously we sold ADA over here. I've sold ADA a couple times when it got really overheated. Two things I was looking at was the separation from the 200-day moving average. 67% sell-off needed to get back to it in that case. And in this case, 50% sell-off needed to get back to it. Clearly overheated, and it was going to come back to the 200 at some point. So when you get these overheated blow-off tops, there's different TA that we use to try to exit fib extension levels and breakout trend lines. But the fib extensions and the breakout trend lines help us to exit positions at the top over here. But if you're still more long-term holding, when you lose the 200-day moving average, like over here, where it's kind of confirmed that it was going to lose, these are all quick bounces. They got back above it too fast for you to really do much. But this right here was a slow roll. Trim some there, and buy back under the 200. Right, that's a beautiful accumulation strategy. That's what I use for my hodl bags when I'm really doing something long term. And this is the 200s where I bought. Remember, we bought a little above $1, and then we sold I didn't buy enough of Cardano at $1, but then we sold up here close to $3 to rotate into Outrun. Again, when it was highly disconnected, it had really disconnected itself from the moving averages, really, 50% above the 200-day. The fibs were overheated, and all the indicators were overheated, so it's time for us to exit on this as it rotated over, curled over up here. But the graph is on the other side of this, right? So this is what you want. You want to be accumulating. Go back on Cardano. This is what I kind of see here on this chart, something similar to Cardano. When you get the moving averages compressed like they are right now, so stay over here, it's more like this is like your price action that you're looking at right now. You're looking at some compression of your moving averages over here, right? So this is the kind of type of pattern you're looking at with GRT, where the 200, the 50 is below 200. So you get this rolling price coming back above all these moving averages. And so now as price takes these moving averages, so here's an entry, and then the 120 have been hard to get, but on the break of the 200 here, another potential entry. So you have two entries here, and you can watch this price action. Now as it loses the 50, this is where you're going to want to trim some more, and it loses the 200. This is where you're going to want to definitely trim when you lose both of these moving averages like this. But then you buy back again over here, so forth and so on. You keep moving around these moving averages, but these moving averages, when they all start to trend in the right direction, then you get yourself a really good long-term position. You trim when you lose the 50, trim when you lose the 120, buy back in the 200. And then, if you had anything left to buy back here, most likely just riding the trade out at this point. But then you have momentum back on your side. And when all these moving averages start to trend upward and separate, you've got a good trade on your hands, and you can manage it accordingly. So that's what I'm kind of seeing there on the graph. Looks nice. I like the way those moving averages are compressing. So let's go back to your graph chart. Patience, though, is the key because, it takes some time for momentum to really build. And so, again, we saw in Cardano's chart, you get this big pop, and then it came back down. I wouldn't overreact to all that. You're gaining momentum. You're putting in a bottom, this big pop right here, putting in some higher highs, and then, I think on Cardano's case, I don't know if it put in a lower. Go back to that price action real fast. Just looking at that going, huh? I don't remember what was happening over here. I remember where I acquired myself was, I think, more over here. Yeah, it was over here in this range. On the coming off 200. Yep. When we took the 50 right here, this is where I acquired really heavy, right here. When price took the 50 and was compressing under the 120, and I knew I was wrong. I could sell some if I got back below the 200 meaningfully. But this is where I was acquiring Cardano really heavy. It was on these touches, this pattern. Yeah, over here was the first time it really compressed. You got your price coming out. And then, yeah, this was that March capitulation. This was a black swan event, right? So it looks like price was already starting to try to want to, you know, put in a move like this, where it puts in that initial move, breaks above, comes back to it, and then off you go. So hopefully you get something like that with the graph. It's a good project. The graph is really cool, really interesting, a way to do oracles. Services, and allows a lot of people to participate in it. The indexing and I forget all the names of all the different nodes that they have. I wanted to run an indexing node on the graph. I've not done it yet. What's up, Heath? All right, I'm gonna have to probably wrap up here pretty soon. But now that Heath is on, you can force it into what I want it by quarterly impulse. You could force it into what I want by doing the quarterly impulse. Okay, yeah. Well, I will. Let's just wait for the next weekly impulse to play out. I really prefer anchoring my fib extensions on the last weekly impulse, just because, you know, going back further than that, it becomes so macro that it's not really meaningful for trading. It's maybe fun to look at, but, you know, I'll wait for the next set of weekly candles to print here for us to get our next impulse levels. So once this low gets put in and we get our next bullish weekly, then I'll be able to map based on this low here through whatever this bearish low ends up being, map that next weekly impulse out, which I think will be helpful. Let's go back to the 4-hour. Look at this. Yeah, again, lose that, bad news bears, and sure enough, we're going to the bottom of this range. All right, guys. Now that Heath joined, we're going to wrap up. Thanks, Heath, for joining. I've been on your replay crew lately. You stream way too early in the morning for me, and it's like every time you stream, I'm not able to join. So I've been on the replay crew. Anything else before we wrap up? See if I missed. Oh, I got a comment here I want to highlight. Whole sell-off has been Bitfinex. Yeah, Bitfinex sell-off, Coinbase buying. Exactly. Wonder what breaks. I know Bitfinex has been controlling the market, but gonna think CB wells have massively accumulated over the past year. Yeah, Brian, great point. I think exactly when that shift happens, when we have more control in the West and less control in the East, you know, Bitfinex and Hobei and some of these others, when that power dynamic shifts as Bitcoin shifts from being largely, you know, because 70% or something like that of Bitcoin was held in China, I think. It was from some very large number of the more liquid supply anyway. And then obviously the majority of mining, it hit over 50% for a while there. Mining, it was in China. So this whole price action, all this stunted kind of upside and the quick sell-offs at, you know, on these breakouts can be very well explained by the macro, you know, the largest consumer of the market exiting the market, right? So you know, there's a lot of supply that got cut with that. So, I mean, a lot of demand that got cut with that. So when that power shift is kind of finished and it's largely a Western asset, and there's that sell pressure from the East is gone, and, you know, assuming the West continues to buy at a pace commensurate with, you know, greater than supply, incoming supply, then yeah, we'll get our price appreciation finally. But that has to finish shaking out, and I personally, it is my personal feeling. Now, I will adjust. I'll flip-flop with whatever the market tells me I have to flip-flop, all right? So just be ready for me to be a flip-flopper. But it's my personal feeling that this is the last little bit of Chinese exodus, if you will, or the last little bit of anybody who's forced to exit the market kind of finishing the move. If they're simply exiting Chinese exchanges and they're exiting, anything that's KYC associated with China and they're moving it to other accounts, or if they're just exiting the market entirely, whatever that may be, this feels like the last little bit of machinations to get out of the market for them, and then the West hopefully will take over and we'll get that price appreciation many have been looking for based on kind of the more fundamental views of things, but we'll see. All right, guys, that's all the time I have. No problem. Cheers, Purple Heart. Thank you, guys. All right, I'm gonna throw up some. Where did my Doge-wave go? My Doge-wave died, y'all. Throw up some Doge-wave. My throat's sore. I've been going way too long. I'm sure you're all sick of hearing me. If you're still here, you're a saint. I wouldn't want to hear myself talk that long. Let's go with a different outro music today. Take care. Oh, ha. Sorry about that, guys. I guess I was sitting over here listening to Doge-wave myself, but thank you guys. Talk to you guys later.